I've done watching episode 2 and episode 3 of the ICT 2022 mentorship. Okay, I have done it, and my thoughts is if you actually learn episode 2 and episode 3, you could fucking be profitable. It's a fucking system in itself, right? If you have good risk management and good psychology, you would be fucking. I can't even. It's fucking unbelievable. But I'm still planning to finish all of them because there's so much to learn. I think it's very simplified. Episode 2 and episode 3 is fucking mind blowing. It's actually gold, right? And let's stop praising ICT. And I'm going. This video is initially going recapping episode 2 and episode 3 because this YouTube channel is my documentation, my fucking journal and shit. So episode 2 and episode 3, he covers liquidity, buy side and sell side, market structure shift, fair value gap fair value gap or imbalances, daily or weekly bias, order block, market structure, and premium and discount. Right. So this system, there isn't really order block. He didn't really show how to trade order blocks. He just showed what makes an order block, right? State of delivery, that stuff. And yeah, so liquidity, market structure shift, imbalances, biases, market structure, and premium discount, right? That's all he covered in 2 episodes, right? And I'm here to use all of them in a new chart, which is gold. I'm going to trade. I'm going to backtest gold because right now, let me see. Yeah. All right, so yeah, I'm going to cover everything. I'm going to backtest using the episode 2 and episode 3 system. I'm just going to say system, right? So all right, I'm going to go to the gold chart. We're trading gold. Okay, so this is it. We're in a weekly time frame. So first things first, market structure. Right, we're looking for the bias. So we got high, low, high, low. Here in the market structure shift right over here. So now we're in a fucking up. We're in a bullish. We're in we're going up. All right, we're going up in this market structure shift, and then we got a low and high. So our low and high, swing low is this and this. Swing high, swing low. What the fuck? Alright, so this is our swing high and swing low. Oh, swing low, swing high, right? This is our. Alright, inconveniences. Alright, let's continue. Where was I? Swing low, swing high. Right, we got our swing low and swing high in the weekly. So we got this imbalance in the weekly, which is now mitigated, I think. Yep. So, yes, swing low, swing high. The overall market is the weekly time frame is going up, but right now it is going down for I think a retracement. So let's go to the daily, right? So you're looking for liquidity and fucking imbalances because that's what the market will draw to, right? This is fucking amazing consolidation. Here, consolidation. Yeah, so we're looking for liquidity and imbalances that the market might go to, might draw to. So on a daily, we got market structure going up and down. and we got this market structure shift. Sorry about that. God damn it. There it is. Over here, market structure shift. Right now. Market structure shift right over here. And under this market structure shift, we got this low right over here. It's fucking equal low, equal high. You got this high equal high of here, relative equal highs, right? So this right here, this equal high is actually liquidity. Fucking go with it, right? So I think the market is drawing into this fair value gap right over here, this imbalance, right? Right, this fair value gap right here. But before that, the fair value gap will be taken out. You must go get this liquidity right over here and go here. After it goes to the fair value gap, you gotta go higher because we have out of here sell side liquidity, and we're yeah, that's really it. Sell side liquidity right over here. I think yeah, sell side liquidity the only one and fair value gap. Yeah, so that's basically what episode one and episode two tells me, told me, right? Just look for stop puns, right? So this equal high right over here is the retail traders stop losses, right? And we're trading off of that. So if it goes here, stop loss is triggered or stop. I mean, yeah, stop losses or buy stops is triggered, and it's gonna go down again. Right there. Yeah, that's basically what episode one, episode two of the ICT 22 mentorship tells me. So this is basically it, right? So if I were to take a trade, right, what we, what, how I will execute this. Wait, this is the daily. This is still not it. Oh my god. But yeah, let's just stay in the daily, right? Uh, so yeah, this is basically that's what going to be going to equal high. It's go down, right? I'm not going to 50 minutes time frame, but this is initially. This is so wrong, by the way. But but this is what he. I mean, but this is what he fucking tells me, bro. Like this is what your fucking market should. I mean, your chart should look like. I mean, he doesn't use any of these lipstick, right? Graffiti, right? He doesn't know this is for beginners. See, he was in the market for 30 years. You know, he's just staring at a blank fucking chart. All right, he always brags about that. But yeah, this is initially, this is so wrong because I'm in a daily chart. But swing highs, swing lows, market will draw the liquidity and imbalances. It's going to take this liquidity in equal high here and take this sell side liquidity or fill this power gap. If I were to take a trade, I would put TP right over here, the sell side liquidity, because he always get the low hanging fruit, the most easiest target to be hit. All right, that's what he said, right? But what I would not cover is the execution of it. So I'm going to draw what the execution would be. If I was, let's say this is a 15-minute time frame. Man, man, man. All right, I'm back. All right, so I'm going to draw what my execution will be, because the blah, 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 this is, I can't speak. I'm going to draw what the execution will be. So let's say this is a 15-minute time frame. I would go to a 3-minute or 1-minute time frame for execution, right? But this is what the execution will look like, right? So let's say this is liquidity right over here. This is buy side liquidity, right? And the market went up. I mean, ran to this buy side liquidity over here, and after it ran, we are going to wait for a market structure shift, right? And then after the market structure shift, you're gonna wait for an imbalance between these between this move right over here, and after it created an imbalance, once the market goes into the imbalance, that's your fucking trigger. That is where you sell, and then that's your entry, right? That's initially it. So you wait for a market structure shift and an imbalance or a fair value gap, and once it goes to the fair value gap or imbalance, that is where you enter the trade with stop loss, profit, and yeah, that's really it. Right over there. This is the execution. So that's basically what ICT told me in episode 2 and episode 3, and some other stuff. We're not going to talk about that stuff, but yeah, this is what he told me to do in the execution part. So that's basically it. Just a quick recap, fresh in my mind, and yeah, I mean that is all, bro. Fuck, what the fuck is this? All right. Yeah. See ya.